June 13 started Israel-Iran clash threw markets into risk-off mode. Geopolitical fears sent oil prices soaring. Brent oil leapt nearly 10% intraday. Even as safe haven gold climbed approximately 1.5%. Equities sold off. The Dow fell over 700 points and S&P 500 dropped approximately 1.1% on Friday. Airlines led the losses, with Delta, United and American each sliding around 4 to 5%. As carriers canceled Middle East routes, volatility spiked. VIX hit approximately 20.8, reflecting jitters over possible oil supply disruptions. Air travel is hit immediately. After the strikes, U.S. carriers fell approximately 4 to 5% as Middle East flights were cut or rerouted. This pushes jet fuel usage and flight hours up, squeezing profits. Tour operators and cruise stocks also tumbled. Carnival, Norwegian down approximately 3 to 4%, as consumers paused bookings amid conflict uncertainty. Energy stocks rallied on supply fears. Brent crude spiked approximately 9% intraday, lifting drillers. Diamondback Energy jumped about 3.7%, while majors Exxon and Chevron rose approximately 2 to 3%. Oil ETFs, like BNO for Brent, surged with the price bump. In the short term, watch OPEC output and U.S. shale. Higher prices may spur more drilling. Long term, continued high prices could accelerate the shift to renewables. Defense is a classic geopolitical hedge. Stocks like Lockheed Martin, RTX and Northrop each climbed 3% after the strikes. The IDA Aerospace Defense ETF saw a modest gain, plus 0.4%, reflecting investor buying. In the long run, increased government spending on security tends to benefit these companies. We might also keep an eye on cybersecurity firms, as conflicts raise the risk of cyber warfare. Volatility spiked. The VIX Fear Index surged, closing approximately 20.8, and related products, VXX, jumped double digits. Gold climbed to 2-month highs, marking its return as a safe haven. Cash and treasuries also saw flows. These moves underline how uncertainty drives investors into traditional hedges, at least until clarity returns. By Friday's close, airlines like AAL and UAL were off about 4 to 5%. While energy names rallied, e.g. Diamondback plus 3.7%. Lockheed Martin and others in defense also jumped approximately 3%. The IDA Defense ETF was up roughly plus 0.4%. Oil-related ETFs, BNO, mirrored the approximately 9% crude gain, and GLD rose as gold neared $3,455 per ounce. On the flip side, VXX rocketed approximately 17% on the VIX spike. In the short run, keep an eye on oil and the Fed. Prolonged conflict could keep inflation sticky. Historically, past conflicts, 1990 Gulf War, 2020 tensions, saw sharp oil spikes, but equity markets eventually stabilized. If the Strait of Hormuz reopens soon, crude might cool off. For now, expect choppiness. Small cap and travel stocks may stay pressured, while energy, defense hold up. Longer term, diplomacy or a deal could reverse some moves, so have your stop limits ready. Bottom line, tilt toward defensive sectors. Energy and defense stocks are standouts. These sectors have historically outperformed during Middle East crises. Gold and treasuries can buffer your portfolio. Conversely, cut airlines and leisure exposure for now. Keep stops on any long positions and stay tuned to geopolitical news. The next few weeks will be key in deciding if this is a brief spike or the start of a longer trend.